Investments in securities are subject to market risks. Read all related documents carefully before investing.
Hello and welcome to the Weekend Investing Daily Bytes. We are shooting this episode on 15th of May and post the elections result. Nifty continues to move on. So we were at 18,250 around or 18,300 on Friday and post the election results where it was widely expected that the BJP party would lose this election, and things have, sort of moved on very, very quickly with market paying no cognizance to this expected outcome, and Nifty closed near 18,400. During the day, it almost reached 18,450 plus also. So, to the disbelief of many, market continues to go upwards. A lot of folks keep calling for sharp cracks. Of course, nobody can really know when those sharp cracks will actually fructify. But my sense, since this inverse head and shoulders formed here, was that we will likely go challenge the new high at least once, and that seems to be currently on play with other indices already having reached there. So Nifty is not the leading indicator here. The leading indicator, as I've said many times, is Bank Nifty, and within Bank Nifty also several of the key banks give that kind of an forward advance guidance. Within the Nifty, you have banks doing all right, not extremely buoyant, but quite all right. Infosys, Wipro, and Tech Mahindra doing all right in IT, and then ITC and Levers are doing very well today. Within the auto pack, you had Tata Motors on fantastic results. Mahindra also gaining. Eicher Motors, Bajaj Auto also gaining. Maruti down a bit. Steel and aluminum stocks also doing all right. Power stocks, along with uh, some consumption stocks in the green, but Adani group of stocks in red today, and several pharma stocks also losing ground along with TCS and Grasim. Sectoral overview: real estate, which is not really represented in the Nifty, big winner. So 4.3% up on this index today itself. For the week gone by, again 4.4%. And just look at how it has performed over the last 1 month: 11.1% over the last 1 month. So this is the uh, most buoyant sector in the last 1 month as well as last 3 months. So last 3 months we are up 16.5% on real estate. Last 1 month we have been up 11.1%. If you have been following me on Twitter for the last many months, I have been advocating that please do take a look at the real estate sector, not just in terms of stocks, but also in terms of actual on ground movement in real estate. My personal belief, and I could be wrong here, that we are in for a long haul of a sort of a wave like structure within the inflation, sort of uh, inflationary environment, globally inflationary environment. India may go up and down, and so is what is happening in the West. But what assets that are likely to do well in that environment of higher inflation and potentially weakening dollars, weakening dollar, is that real assets like real estate, like precious metals, may do very well. And that's what we have been seeing for some time, that they are indeed doing very well. On ground, real estate is moving very rapidly, at least in the area that is near me, North India. And from other parts also, I'm hearing quite a buoyant, and it's very, sort of evident when you see that large companies, listed companies, are buying large land parcels even now. Even today morning, there was some news about 15,000 crores worth of land parcels being acquired by one of the large players. Another, the largest player in the in the listed segment, there were these source-based information that a large new project is coming up in Gurgaon. A golf project is coming up, and it's going to be priced much higher than what we have seen so far. So all this is basically showing that there is demand, and there is an appetite uh, for real estate right now. Anyhow, so FMCG, PSU banks, public sector enterprises, autos, bank Nifty, consumption, infra, IT, all doing 0.5% or more. Nifty also closing at 0.5%. Some sectors not moving at all, but overall a reasonably good buoyant session. Mid caps doing quite well after 4 sessions of being a bit shaky. Continuing with this upward pattern, mid caps have gone from 29,000 to 32,000, so almost a 10% straight gain in just over 6 to 7 weeks. So the markets and overall the breadth of the market may be getting a little frothy here. So as and when we get to resistance levels, we will see that profits getting booked, but the trend still continues. Just like in small caps, we saw some iffy moves around that trend line, but once that is clear, today we have closed at a new high on small caps for the last 6 8 months. The all-time high is still far away for small caps, but for Nifty Bank, the first major index which has uh, closed at a new all-time high, so that is extremely commendable. We have gone from nearly 39,000 to 44,000, so a gain of nearly 13%. Extremely good gains. And I always say that Nifty banks lead the markets. Whenever you find that banks are hitting new highs, whether it is a weekly high, whether it is a monthly high, whether it is a quarterly high, yearly high, all time high, it is giving you an indication that the economy is doing well. So, the topic of discussion today is about currencies and how unstable currencies uh, have performed in terms of how the equity of those unstable currency countries have performed over time. So, we have taken all charts in dollar terms so that there is parity across whatever we are discussing, uh, and compared it to the gold price in dollars. So, what we're trying to showcase is that if you have a stable currency, gold is a decent hedge versus equity. But if your currency becomes a bit unstable, or if the currency is losing value, then how does equity perform along with that hedge is something that you will see here. So the chart is global MSCI ETF. All these are ETF charts. So the blue lines are all ETFs. The orange line is the gold price in US dollars. So there is no local currency involved here. The ETF is priced in dollars. The gold currency is priced in dollars. And you can see that the last few years of trouble that Pakistan has had, of the last 5 years, the global ETF is down 68% in dollar terms, and the gold hedge in the same time period is up 70%. So if somebody had created a 50-50 portfolio sitting in, let's say, a third country, let's say some Pakistani expat was sitting in UK, and he said that, okay, I want to invest in my country, but I'll invest in the ETF listed on the US exchange, and I'll also buy gold in US dollars. Then he would have not have made money overall at a 50-50 portfolio, but would not have lost money either. If he had just bought his country's equity, he would have been down by 68%. I mean, you can just imagine having a portfolio down by 68%, and that to an ETF. So if somebody was actually investing in particular specific stocks, they may or may not, they may be even worse off than this situation. Philippines, somebody's buying USD, gold, and MSCI Philippines ETF over a decade. Uh, Gold has performed better at 48% versus 12% of Philippines. Of course, there was a time period where the Filipino ETF did extremely well, but for the last 10 years, there has been a fall in the US dollar, in US dollar terms, on the Filipino index. So you need to see the context is about currency. We may sit in any country in local currency and see our equity market going up and be very happy about it, but unless you are able to see that what is happening in US dollar terms versus other currencies uh, versus the universal hedge, what is happening in your equity portfolio. Indonesia, a country that has been doing extremely well lately in terms of China plus one policy. Just see where the ETF is. ETF has not moved in the last 10 years. So if you had bought equal quantities of US dollar ETF and gold, I mean, gold is up 48%, ETF is down 5%. Vietnam, we keep hearing about Vietnam a lot, that a lot of manufacturing is shifting to Vietnam. Please see where the Vietnam ETF has gone. Vietnam ETF, I could not find the MSCI index, but I'm using another, I think this is a Vanguard ETF. Uh, it's down 43% since last 13 years, 111 on gold, meanwhile. So, I mean, it's very, very stark situation that you are able to see. UAE, I mean, last 9 years, the dollar ETF is down by 18%. Dollar gold is up by 61% at the same time. I'm not saying don't do equities, only do gold, but what I'm saying is use gold as a hedge in dollar terms. That is your only savior. If dollar is collapsing versus other currencies, then also gold will do very well. Japan, classic example where people say, equities did extremely well in the 80s, and of course they did go up almost 450% from 83 to 1990. But since 1990, last 33 years, equity has not come back to where it was. Uh, Gold hedge would have saved you a lot. Both have performed equally well in the last 50 years. Sorry, 41 years. I mean, that's crazy. And in the last 4 or 5 years, both gold and equity have performed together here. So while you had a great run and a huge shock, the hedge would have prevented your house from totally collapsing here. So enormous number of examples are there where if your local currency is not USD, even then you must compare your equity performance versus other countries and what is happening in versus the gold hedge. Turkey is another example. We've seen that Turkish currency issues have cropped up in the last few years. Just see where the currency ETF, the equity ETF has gone. The MSCI Turkey ETF, it's flat for the last 14 years. Even if you ignore this part of the chart, even in the last 8 years, uh, ETF is down 20-30%, and gold is up here. If you will reverse all these charts and see them in local currency also, so instead of MSCI index, if you are looking at the Istanbul 100 local index in local currency versus gold price in lira, you will find the same charts. So it is not that these USD charts have changed anything. You're doing like to like comparison. That is why it is coming off like this. So now what about India? Now India fortunately is in a very safe and secure place. We have good international reserves, USD reserves. We have very stable government. I hope the stability can last for a long, long period. But as we have seen in many elections, a surprise can always be there. So next year is the important election year for India. And while I don't wish for it, it is possible that there may be a surprise. It is always possible. even though the trend is in another direction. You never know how these things move actually. So w- just for I would say, for the sake of possibility, if we have a hung parliament, or for the sake of possibility we have some parties which create a coalition where the leadership is not clear, uh, we have no clear economic policies, whatever good that may have been done gets undone by the new formation. Anything is possible. Maybe not in 2024, maybe in 2029, maybe in post 2029, if a government cannot last for even 5 years. Anything is possible. So you are taking a 10-20 year bet on India, that India is going on a hockey curve growth rate. That is fine. That is how it looks. But it can be that trend or that hypothesis can be damaged at any point of time. Some major assassination may happen, some rogue neighbor may attack you, some nuclear conflict may happen in the world. Anything can happen anytime. You cannot just sit on the bet that my Excel sheet is showing EPS growth of 20% per year, and hence I will bet my house on this stock, or I'll bet my house on India stocks only. That is not the way how a responsible investor, a family person, would invest their money into. So India is still looking very well. There is no doubt about it. We have taken the last decade here, and the last decade, the dollar ETF is up 81%. Uh, the gold currency in dollar terms is up 18%. Still a good hedge. Whenever we've had a major fall in the ETF, you had the gold making up. Here also you had a fall, gold making up. You had a fall. Here the gold did not make up, but here you are having a fall and gold is going up. So there is a inverse relationship for sure. Uh, the main issue is, what if this growth, something happens to this growth, something happens to the plans that we have for the next 10-20 years. What, and if our currency goes for a toss? We have seen numerous examples around us. Of course, they are very different from India. uh, but there are so many countries where we have seen currencies go uh, for a uncalled for drop, and that is where your hedge will save you. So please consider investing in non equity also. I still propagate that you must invest in equity, and then as you mature, as you grow older, you should start asset allocation. uh, Within asset allocation, look at gold, look at real estate, look at some other non equity items also. In equity, you could look at uh, systematics ways of investing, so that I see so many people who don't come to equity market because they say, I mean, who's going to get into this headache? I don't want to look at balance sheets. I don't want to follow stocks. I don't have the time. I have my professional career to look after. So they'll give it to some PMS or some other guy. Then 5 years later, then they may find that nothing is happening in this portfolio. So find some ways where something is being done as per some structure over a period of time. Some growth will come. Even mutual funds you can do, no issues. Some small cases you could do. So the idea is that you have a structure of how to invest equity, and also to have hedges around equity, so that in extreme situation also you are not left in a situation where your last 20 years of hard-earned money is not available to you when you need it the most. So create a balance and make sure that you have an enjoyable and fruitful investing journey. Thank you so much for watching this episode, and I'll hope that I can keep bringing to you more such episodes. Thanks. Bye.